Okay, I think we'll get started now, since it's almost 10 past, and I just wanted to welcome everybody. Thank you, everyone online and everyone in the room. And yeah, if people online want to introduce themselves in the chat, please do that. My name is Gaia Sriskanthan, and I am a member of Democratic Socialists of America, DSA International Committee, which organized this webinar and this event. And I'm the co-chair along with Adam Ray, who's online, of the Climate Economic Subcommittee of the International Committee. And I just wanted to, and also Keitaki, yeah, I butchered your second name, as many people have done mine before, but has kindly agreed to help with facilitation, and she's actually done research on tax justice, international tax justice with the Climate and Communities Project. I just wanted to say thanks to the International Committee for supporting this event, and for the National Political Education Committee of DSA, plus the People's Forum for giving us incredible space so that we can have this conversation. And just to tell you a little bit about the Climate Economic Subcommittee, we sit within the International Committee. Our role is to help DSA members understand the global economic system and how it relates to the climate crisis from an international perspective. And we've been running various political education activities. So last year and the year before, we did one on the international global economics and trade, where we looked at the World Bank and the IMF and how it functions and upholds a sort of neoliberal order.
Do you have a recording of that?
We do, and if you signed up for the webinar,
yeah,
we will share that with everybody after.
Oh yeah,
yeah,
I would love to.
And I think the injustices and the struggles we're engaged in here in the US are only recreated and amplified internationally. And we know these struggles are global. It's not new to us. The climate crisis certainly doesn't let us forget that. But people here online, maybe watching the recording afterwards, are organizing in the one country that has the greatest power to uphold and maintain this system globally. So that's why we think it's really important for us to keep drawing the links between international work and our work here in the country. So through this 3-part series, we'll be exploring how the tax system has been constructed to maintain global inequality, just as it does here in the US. And we'll look at how tax reform can be a tool for reparations nationally and internationally, and how movements have been organizing to transform the tax system. So, if we're interested in economic justice, decolonization, reparations, and climate justice, then the tax system really is a big part of that puzzle. It's one of the major pillars of the global economic system. So we really hope to leave you feeling more informed and inspired to keep exploring these links, and consider how we as organizers in the US can connect our work to the efforts of the left and progressive movements across the world. Welcome, Mel. Just to flag that we've provided you with 3 readings that if you signed up online, and we'll send it around afterwards again to help orient you, and absolutely fine if you haven't read them coming into this, but they're great reference materials, which might even make more sense after this presentation. And today what we're going to have is a presentation that lasts around 40-50 minutes, and then after that we'll have some time for discussion. So please do keep in mind any questions that you might have as you go along. And for our first session today, we are extremely lucky to have Sergio Chaparro-Hernandez here to help us build an understanding of how the international tax system works. We're really grateful for his enthusiasm and support of this project, so thank you, Sergio. Sergio is the international policy and advocacy lead of the Tax Justice Network, and he's also the international coordinator at the Colombian human rights organization de Justicia. He's an Atlantic Fellow for Social and Economic Equity. He has a passionate commitment to forging alliances across movements and geographies to advance global economic justice. And before joining the Tax Justice Network, Sergio worked at the Center for Economic and Social Rights, where he contributed to build and strengthen the initiative for human rights in fiscal policy across movement coalition that aims to transform the way decisions on public resources are taken. And in Colombia, Sergio worked with the National Congress and the Political Council of Bogota, and he has an MSc in inequalities and social science from the London School of Economics, and he studied economics philosophy and holds a MA in law from the National University of Columbia. So we're really super stoked to have you here with us today, Sergio. And I think without further ado, I will let you take over.
Thank you so much, Gaia, for the introductions and for organizing this excellent series of talks that I have the honor to start. And thank you, of course, to the ESA National Committee. I think that, yes, Gaia said, well, tax justice, of course, is at the core of many struggles that movements across the world are dealing with at the moment, as well as globally, like a coalition of movements are just like this week starting to negotiate a UN tax convention that I will have a chance to speak more about it later. But I think that this is a good time for this discussion because after decades of demanding a more inclusive global tax governance, there is a window of opportunity to advance reforms at the international level, but also I think that there are increasing calls to tax the rich everywhere, and I hope like this conversation is helpful for the purpose of understanding like how to make the most of political opportunities and taking into account some challenges for advancing campaigns and other organizing work for demanding of fairer tax systems. So I'm going to make a presentation. Let me know if you are seeing my presentation now.
Yeah, great. Thank you.
Perfect. Thank you so much. Okay, so yeah, Gaia asked me to like give an overview of like why and how is that the global tax system is not working at the moment. I mean, like I think it's important to clarify that, of course, like when you listen to some actors within this field, let's say, for instance, the Organization for Economic Cooperation and Development, the OECD, where probably they are going to say, like there is a huge progress in this topic because if there is a topic in which international agreements and multilateral action is being taken despite the crisis of multilateralism is on taxes. But as we will see, well, there are several malfunctionings of the current tax system, and the reforms that the OECD is proposing might exacerbate some of those problems. But luckily, like we are discussing also alternatives that are gaining traction. So in order to address this issue, well, I'm going to divide my presentation into two parts. So first of all, I want to start with a couple of ideas to have like a general narrative of what is at stake here in this global tax justice discussion. Um, and I will use two metaphors to explain this. First of all, I'm going to, present a double view of what corruption is internationally and why, if we look at what is happening with illicit flows and how money flow from one country, from some countries to others, we can have a different picture of what corruption is if we just focus in traditional views of corruption, such as the Transparency International indices and other measures. And I'm going to use the metaphor of tax systems as codes of like as a software, let's say it, of of how economic transactions work that is that has a malfunctioning code to explain some of the more technical discussions that I think that could be better explained with this kind of metaphors before addressing more specific details. The second section, I'm going to focus on what's the role of taxation and 5 functions that taxation plays and why capture global tax governance undermines these important functions of taxation. Then I'm going to provide a view of the role of taxes in explaining the injustices around illicit financial flows. And the fourth section, I'm going to focus on what can we do in response after this diagnosis with a focus on the US and in political opportunities that emerge in the context of the US. So I'm going to start with these 2 ideas that I just described. First of all, well, as you can see in the screen, well, here we have 2 maps that present a completely different picture about what corruption is. The map on your left, I think, is a map that shows how corruption is measured according to the corruption perception index of the Transparency International. So where local corruption is perceived to be high. And as you can see, well, basically there is a north-south divide here, and there is this traditional idea, well, global north countries have functional states that are much more transparent, less corrupt. They have been able to they were able to consolidate strong institutions, and they are accountable to their citizens, whereas global south countries are corrupt and are kleptocracies or these traditional views of what corruption is if we measure it globally. I don't want to deny that, of course, like there are corrupt elites in the global south, and it's important for people in different countries to fight both against like those corrupt elites in their own countries, but also I would like to highlight that this is a very limited view of corruption, because if we look at the map on your right, that measures like where foreign corruption is enabled the most, according to the Financial Secrecy Index that the Tax Justice Network calculates. Well, you have that the picture is completely the opposite, like basically there is a flipped view of what corruption is. And as you can see, well, the most the countries that provide financial secrecy services and that enable corruption the most are global north countries, whereas global south countries have a minor role in enabling the one of the like main phenomena that is that we can frame as corruption, that is illicit financial flows. Of course, there are some global south countries that enable corruption as well. Particularly, you can think on the in for instance, some countries that are usually framed as tax havens in the global south. Let's think on some of the Caribbean countries. But I think it's important to say also like that some of these countries still are part of a network of offshore jurisdictions that are part of the old empires. And in any case, those countries that in the global south operate as tax havens that are not subordinated to former empires have a limited role in comparison to the main financial centers in enabling corruption. So I'm going to speak more about how financial secrecy is measured afterwards here. But what I want to highlight is that we need to start by challenging the narrative of what corruption is and taking a global systemic view on the flows of money to understand that the picture is much more complex and nuanced than what traditional measures of corruption usually offer. And the second metaphor that I want to focus on is in this idea that I think it's helpful for the purpose of understanding all the nitty-gritties of the tax justice discussion at international level to think of tax systems as computer programs that can be constantly that are constantly being revised and updated, and that you can code in a way that can benefit some actors more than others, or in a way that you can try to design and come up with fairer rules. But the thing is that over the past few decades, the lines of code that determine how our tax systems run have been dictated to our governments by corporate giants chasing their own interest, while most of the public has been left out of decision-making processes. So current tax systems can be understood as malfunctioning codes that have been dictated by decision-making structures that have been captured by big interests, like big corporate interests, such as, for instance, the Big Four. I'm going to speak more about this later, but just to understand what what are some of the implications, for instance, at domestic level, of how tax systems have been captured in the way tax laws are designed, in part because, for instance, in many Western democracies, despite the fact that well, democracies are celebrated as, it's where people's interest can prevail over private interest. Well, you also have legislative bodies that are completely captured and that are deciding on the rules of the game and are programming their own tax systems in a way that is completely rigged against the most powerful. Sorry, against the people and in favor of the most powerful. So, for instance, here you have a chart that shows how the average tax rate has changed over the past decades. And what you see is that, for the 400 richest Americans, there has been a gradual decrease of their tax rates, whereas for the bottom 50% earners, you have a slight increase, to the extent that, if you compare what a working class person is paying in terms of effective tax rate nowadays is higher than some of the effective tax rates that the richest paid. And this has occurred at the same time that you see that there is a race to the bottom in terms of corporate tax rates. So this is how individuals are taxed. But then when you look at corporations, you see that in the US and almost everywhere, you have also a gradual but continuous reduction of the corporate tax rate. And you have this ideology of, okay, in order to attract investment, you need to reduce further the corporate tax rate that has led to a real race to the bottom in terms of corporate tax rates. And this is particularly harmful nowadays for low and middle income countries whose tax collection depends a lot of corporate revenues. So this is playing against marginalized people in the global south because it's depriving states of having resources to be able to fund the provision of public services for people in the global south. So yeah, just to mention that for the first time in 2018, US billionaires paid less tax than their secretaries, and this means like that not only at international level but also domestically you can provide evidence of how rigged and how bad coded the system is. Now, what happened at international level? At international level, I think it's important to say that, like there is this idea of at domestic level, the capitalist state, was born with the bourgeois revolutions, with this idea of what the emerging bourgeois was like claiming against the abuse of power of the old kingdoms was we need to have a say in how taxes are collected. This old principle of there is no taxation without representation. I think that's one of the core principles of how the modern state was born. But when you have a international pressure to reduce tax rates, or you have actors that are able to reduce their tax rate against what the statutory tax rate, this is the tax rate that is in laws, is, well, you have this principle of there is no taxation without representation is being undermined, like completely, because this means that all these forces of tax competition basically are depriving people of making, like through their legislative bodies, the decisions that they want to make to tax different actors. But also there are other consequences of the way these international forces impact on domestic tax systems. For instance, once like you have very powerful actors that are able to pay less than they should according to their laws, you are undermining also the level of redistribution that like the representative bodies in each country is deciding that the tax system should undertake. So you have with these forces of international tax competition that are allowed by the problems of international tax law, a huge impact on like what representative taxation means, and on the level of redistribution and on the level of tax collection to fund public services that people want to decide at a domestic level. And this is happening because some of the rules that we have nowadays that were decided 100 years ago on how to tax multinational and how to tax individuals, are completely obsolete or are really defined or set for benefiting the most powerful actors. So just a couple of figures to understand the magnitude of the problem. For instance, with the data that the Tax Justice Network uses for calculating what are the losses that states are having as a consequence of international tax abuses, we have that every second the world loses the equivalent of one nurse's yearly salary to a tax haven. So in just this slide of 30 seconds, like given the structure of offshore like jurisdictions, 30 nurses' yearly salaries are lost to tax havens. And one of the problems of the system is that it's so intricate and complicated to understand that then that enables some actors such as law firms and accountants to be able to play with the rules of the system in a way that other actors can't do, and in a way that is very hard for the public to understand what are the issues at stake, because they are hidden under a very technical language that makes everything sound very legitimate, but in fact hides like decisions that could have been like different, in the way we designed our tax systems. So I want to just highlight two examples of how these companies and rich individuals abuse of tax rules, So, for instance, let's think in a company that we can call Cool Shoes, a multinational corporation with a shoe store in France and a holding company in Ireland. So the holding company in Ireland only exists on paper. The only physical presence it has in Ireland is a mailbox that Cool Shoes rents. So Cool Shoes makes the holding company the owner of its Cool Shoes brand. The only thing that the Ireland company has is, an intellectual property that is called, okay, you are owning the brand of what the multinational corporation is. So let's say that the shoe store makes 100 euros in profit selling shoes in France, and then the holding company in Ireland charges the shoe store 100 euros in royalty fees for using the Cool Shoes logo and brand. As a result, the shoe store is now no longer making a profit in France, while the holding company has a profit of £100 in Ireland. This is the kind of, like artificial book of profits that law firms and accountants have specialized in, and that allow corporations to move their profits from jurisdictions that charge higher taxes to lower tax jurisdictions or zero tax jurisdictions. So in France, for instance, the entity of Cool Shoes only reports that its shoe store made no profit to the French tax authority, leaving out information about its holding company's profit. And the profit is reported in Ireland. So if Ireland has zero tax rate for these kind of holding companies, then what you have is that the company is paying no taxes at all. So corporations usually are concerned for what they call double taxation, that given that different countries can tax an activity that happens across countries, like in several jurisdictions, the same source of income is taxed twice. But what we have, the most serious problem that we have in the system right now, is that there is double no taxation. There are incomes that, for instance, like we are seeing here with Cool Shoes, are not taxed at all. So this is what happens when, for instance, you have a system that allows companies to report only some information as separate entities, and you don't fiscalize those companies as a unit. And if, for instance, with reforms such as a mechanism that is called country by country reporting, accounting like rule that demands from corporations to report their activities on a country by country basis to compare if there are, for instance, some strange things like having a lot of profits in Ireland where there are no workers of the company. This has been information that has been reported only to tax authorities. But, for instance, currently, companies are, and the OECD is favoring like this claim, are resisting to make this information available to the public. That will help to fight against these tax abuses. One more example then. If we understand now how it works, the way profits are shifted, and how that's enabled by accountant and lawyers, then imagine that you have a company called Big Cigarette that is a multinational corporation with a manufacturing company in Bangladesh, a sales company in Kenya, and a head company in Jersey. So the manufacturing company in Bangladesh employs 5 people and makes cigarettes which are sent to Kenya. The sales company in Kenya employs 4 people and sells the cigarette to local shop vendors. And the sales company in Kenya then shifts its profit to the head company in Jersey that only employs 1 person. So the multinational is operating as a unit, but then it artificially can say, okay, we have separate entities in different countries, and where we are making the profits is actually in the country where no taxes are charged. So when multinationals pay taxes as separate entities in different countries, they can do this kind of things. But the system could have been developed completely different. It could have been developed taxing multinational as a unit, as a global unit. So collect information on how the multinational company is operating as a unit globally, and then calculate an overall like a global profit that you can allocate across jurisdiction based on where real activity takes place. That's a system that is perfectly possible to design. But the thing is that as the system has been captured by the most powerful and by governments that have defended their interest of their companies, well, 100 years ago, something that is called the arm's length principle that basically allows companies to operate as separate entities that are taxed differently, as those separate entities in different countries. Well, the system of unitary taxation was never implemented. Imagine how complicated this is when you have like digital companies that you have no physical presence in a country, but actually are using the data or selling a lot of services in that country, paying no taxes at all, because they can't even like have a physical office. So they don't pass the test of physical presence. That is one of the pillars of also how a state can tax a company under the old rules. So this century-old and unfair tax architecture was decided at the League of Nations 100 years ago. So when a business activity crosses national borders, the question arises as to where the profits resulting from the activity should be taxed. And in principle, there are at least 3 possibilities for assigning a taxing right to a state. So there is the principle of source, that countries where the production takes place can tax that activity. The principle of residence, that is the countries where a company is deemed to reside, can tax that activity, let's say where the headquarters are. And the principle of destination, the countries where sales take place. Well, the problem of the current rules that were decided 100 years ago is that, of course, like as was decided by the all imperial superpowers, like it prioritized residence, like as the main principle, and establish a lot of complications for allowing source countries to use their prerogatives to tax activities that are happening in those countries. So the current international tax framework is based on the so-called 1920s compromise, adopted at the League of Nations, and it's this compromise that basically the primary right to tax business income is assigned where the activity takes place in the source country, but there are something that they call the right to tax passive incomes, such as dividends, royalties, interest, and so on, that is given up to the residence country. And then all the system of tax treaties, bilateral tax treaties, and so on, are designed as part of an imperial project to extract resources from source countries, from global south countries where the activity takes place. And that's the core problem of the current tax system. So after the League of Nations, the main dispute has been that, like when the Plan Marshall was implemented and the OECD was created as the instrument for the US to implement the Plan Marshall in Europe, well, part of the plan after, like, in the post-war period was, okay, let's delegate in the OECD the production of international tax regulations. And the UN, the United Nations, that has a broader participation, and it's not only a club of rich countries like the OECD, has pushed for having more possibility of deciding on tax rules. But the problem is that the OECD has managed to constantly avoid that rules are decided by the UN, or to reduce the importance of UN model treaties to negotiate tax treaties, including, for instance, something that is just one of the many anecdotes that you have about this. What happened back in the 1970s, where Salvador Allende in Chile proposed to create a UN Commission for Transnational corporations at the UN level. And that commission was founded in 1975 with a view to establish binding rules for multinationals, for transnational corporations. So within this commission, a group of experts on international standards of accounting and reporting called GAISAR was convened to improve the financial transparency of transnational corporations. And among the experts, there was a consensus that, for instance, public reporting requirements, different rules that prioritize the interest of source countries were part of these emerging binding rules. But then the publication of this group of experts in 1977 drew a reaction from two leading business lobby groups: the International Chamber of Commerce, that still exists, and the International Organization of Employers. This is like the business association organizations globally that actually play a very important role in basically disseminating neoliberal thinking all over the world, as a very good book written by Queen Slobodian called Globalist shows. So these associations form a working group to coordinate opposition, and subsequently publish a detailed letter ahead of the meeting of the UN Commission for Transnational Corporations, where the report was going to be adopted. And the OECD representatives threatened to leave the Commission for Transnational Corporations if the report was adopted, and to stop financial support if the majority voting was not replaced with unanimous decision making. It's exactly the same thing that is happening nowadays at the UN with the discussion of a UN tax convention. Blocking countries want a unanimity rule, and they want to boycott the progress that has been made in terms of trying to start the negotiations around a UN tax convention. So ultimately, the OECD countries were successful, and for the next 15 years until the dissolution of the UN Commission for Transnational Corporations, no consensus on binding standards was reached because OECD members rejected disclosure proposals from lower-income countries. So this is a fight that is really long, and what it's at stake here is a different way of programming the code in which the global economy is operating. So yeah, I wanted to start with these two ideas to contextualize more specific technical discussions that we are going to see. But before going to those discussions, I wanted to basically say some things about why taxes are important. And I think this is very important for the US context because, the US has been permeated by an ideology of basically equaling taxes to evil. And this idea of, taxes are the worst thing that you can imagine, and charging more taxes is stealing people's money, and this very individualistic neoliberal ideology that has undermined the possibility of having a functional welfare state in the US for so long, But I think it's important for campaigning purpose to remind what are the functionings, the functions of taxation. So we speak at the Tax Justice Network. By the way, I must clarify that I am doing this talk on a personal basis, but I am going to use materials from the Tax Justice Network to illustrate some of these ideas. But some of the things that I'm going to say here do not are not necessarily the view of Tax Justice Network, and I think that that's an important clarification to make. But at the Tax Justice Network, there is a very pedagogical way of explaining what are the functions of taxation. So the first function is that we can explain using this framework of 5 R's of tax justice is to raise revenue, to fund public services, infrastructure, and the operation of the administration. A second function is redistribute income and wealth to curb inequalities between individuals and groups. A third function is repricing. This means, for instance, changing the price of things in a way that you change the incentives of economic actors to buy more or less of those things, or you change the prices of those goods and services so that you, for instance, can limit health damaging products such as tobacco consumption, or also limit climate damaging products, including carbon emissions, so there is a fourth function that is representation. This is what I mentioned before about this idea of there is no taxation without representation, and at the core of how a democratic regime should work, it's important to think on what are the representation mechanisms for deciding on taxes. And a fifth function has to do with reparations, with given all the plundering and destructive systems that have created so much ecological and social damage, taxes have a very important reparatory role to play, and you will see more about this in next sessions. And that has to do with fixing the problems of the code internationally, of how the international tax architecture works. So the problem is that corporate capture that happens through different mechanisms. I am just putting here some of these mechanisms based on a definition of what those mechanisms are and a definition of what corporate capture is by the ESER-Net, a network of economic, social, and cultural rights, human rights organizations. So they define corporate capture as the many ways that economic elites exert influence to shape domestic and international decision-making spaces in order to maximize profits at the cost of human rights and environmental justice. So you have, of course, community manipulation, economic diplomacy, judicial interference, legislative and policy interference, privatizing public services, revolving doors, shaping narratives, capture of academic institutions. But I want to highlight one form of capture that you see very clearly in the field of international taxation, and is what I mentioned before, the way decision-making spaces have been captured and the way like the whole offshore architecture was created as a response of a decline of influence by old empires such as the UK all over the world. There is a very good documentary about this called The Spider's Web, Britain's Second Empire, that I strongly recommend, and that I think that shows how the City of London, a convenient term for a collection of financial interests, is able to assert itself against the government of the country by, like, creating this mechanisms to protect financial secrecy within the UK and outside the UK with a network of jurisdictions to control money in a way that they are able to pursue a policy at home and abroad, contrary to that which is decided by the people. So what are, in numbers, the consequences of this? Well, the revenue losses annually account to 400, almost $500 billion due to tax abuse. From those tax abuses that, like institutions like the IMF have said, not Tax Justice Network or others, that these figures that are estimated through these reports that multinationals do on a country-by-country basis can underestimate between 7 to 12 times the magnitude of tax abuse. But at Tax Justice Network, in any case, the methodology is conservative, but Tax Justice Network clarifies, like, actually, this is a minimum estimation. But with the minimum estimation, do you have that the problem is huge? And this problem impact on both higher income countries that lost the most in absolute terms, like 443 billion is lost in those countries, and lower income countries less in terms of absolute value. But when you see in relative terms, what does that mean? Well, for low and middle income countries, this means that they are losing 48% of public health budgets due to this problem. Whereas in rich countries, this is 10% of public health budgets, huge in any case. And as I said, this is lower bound estimates. So who are the main enablers? It's a problem of rich countries, not Palm French islands, who are the ones that are responsible for most of global tax abuse. So you have here that if you look of all the overall losses, you have that 78% of those losses are due to rich OECD countries. And 55% are due to what, for instance, some people call the axis of tax avoidance, UK, Netherlands, Luxembourg, and Switzerland. So yeah, then you have that the magnitude, and the way to translate these numbers into something that can be more meaningful for people is, for instance, showing what are the human rights impacts of this. For instance, in Guyana, the tax loss is equivalent to 308% of health budget and 149% of education spending. Whereas the Netherlands is inflicting, for instance, harm to other countries because it's responsible for 8.50% of global tax losses, and that those losses mean that the inflicted tax loss is equivalent to the yearly salaries of 200 of 883,000 nurses approximately. So the problem is really huge and impact a lot, like both rich and lower income countries, but the proportion, of course, impact the most lower income countries. So how all this captured global tax governance undermines the 5 R's of taxation? Well, it reduces the revenue because of these massive revenue losses. It reduces the level of redistribution because, of course, the ones that benefit the most of all of these abuses are the richest and the most powerful corporations. It undermines the function of repricing because, for instance, corporate actors manage to prevent that the states use their regulatory power to tax social bads, including, for instance, pollution, carbon emissions, and so on. It undermines representation, as I said before, because the people are not able to legitimately decide what's the amount of taxes that they want to collect and the level of redistribution through the representation mechanisms, because basically tax laws are completely violated, and corporations and rich individuals are not paying what they should. And it undermines reparations or the reparatory function of taxation because it exacerbates historical injustices in the destination of flows. So plunder continues by other means in an age of climate emergency. I want to conclude this section just saying that, to put into context then, what happens when we say, or what's at stake when the OECD and OECD members claim that actually the OECD can fix a problem like the one that we are seeing. Well, this is a sentence of the coordinator of the Global Alliance for Tax Justice, and he says basically that trusting the OECD to set global rules on corporate tax when OECD member countries are responsible for over 2/3 of global corporate tax abuse is like trusting a pack of wolves to build a fence around your chicken coop. Well, the problem of illicit financial flows that is behind the fact that countries have been plundered by all of this, I think that I can go quicker on this section, allows me just to put into a broader historical context what is also like the kind of very sophisticated device for extraction that it's at stake in the design of unfair taxation rules. So we can think of like 3 imperial ages that have a different character in terms of how economic value is extracted. So age 1, we can call it the age of slavery and empire. So basically, value is extracted by the denial of right to statehood, like when an empire subordinates another territory by depriving the people of their right to statehood and to representation through sovereign mechanisms. Well, they are imposing through violence the possibility of extracting resources without having to mediate relationships with an independent state. But once independent states started to emerge in the global south, For instance, when Britain started to lose many of their past colonies, and these colonies became independent states. So it was the time in which also the British, particularly, I mean, like the city of London, decided that it's very sophisticated mechanism in response to political independence of those countries to keep the economic dependence that was designing this network of double taxation treaties to keep extracting value, even if you have, let's say, a sort of game of allowing them political independence, but without giving them real economic independence, because you keep the destructive logic, but through this very sophisticated network of tax treaties. And the third age, going beyond tax treaties, is when you have a full tax haven empire, the age in which we are still right now. And it means stripping of taxing rights other countries by the way you design international tax rules, in turn damaging the prospects for effective statehood. What drives all of this? Well, financial secrecy, basically, the ability of some jurisdictions to protect those that can hide their untaxed wealth in other countries, also providing tax incentives that enable, for instance, these logics of extraction, weak regulatory structures, poor governance, double tax agreements, etc. So just to show what are the main enablers according to the Financial Secrecy Index, in the Corruption Perceptions Index that I was speaking before, some of the European countries like Switzerland or the Netherlands or Luxembourg are on the top of the less corrupt states, according to Transparency International. But when you look at the Financial Secrecy Index that is calculated through assessing to what extent domestic laws protect financial secrecy and, for instance, do not demand disclosure of key information for making sure that tax authorities are able to make corporations or the richest to pay their fair share. Well, you see that actually the United States is the top 2 in the list. Switzerland is among the top 3. Singapore, Luxembourg, some of the ones that actually here in the top of less corrupt are among the most corrupt states. Again, flipping the history around corruption. So what can we do in response to not be only pessimistic and keeping this very sad picture of how the world is nowadays with this continuation of the logics of extraction through the design of international taxation? Well, at the Tax Justice Network, for instance, there are proposals to fix the code, the way it's packed is under this idea of the ABCDEF triple G of tax justice, that are a set of proposals that include, for instance, automatic exchange of financial and tax information between the banking sector and tax authorities. For taxing wealth, it's very important that in addition to legal registry or to registries of who or what are the legal entities that own wealth, it's important to go beyond the legal ownerships and understand what are the ultimate beneficial ownerships. And the ultimate beneficial owners, sorry. So to that end, there is this trend of creating beneficial owners registries that you can check to understand, okay, who really controls and owns a legal structure, a company, or a trust, or a foundation. So that's very important for making sure that we can tax wealth effectively, Again, public country by country reporting. I explained a bit before what is this mechanism of reporting where multinationals operate, and if that information is public, well, journalists, civil society organizations will be able to do this to monitor how is that happening. Disclosure around like key additional tax information, having very strong like mm, tax authorities with strong labor unions where like their labor rights are protected. This idea of unitary taxation and formulary apportionment, I mean, like this idea of taxing multinational as a unit and allocating the taxes collected based on a formula where real activity takes place. I mean, I don't want to use the jargon precisely for keeping this as it should be, for depriving like different actors of understanding the topic and being able to participate meaningfully in the design of tax laws. And a reform of global governance. That means, for instance, moving from the control by the OECD of how international tax standards are decided to a more inclusive fora like the UN that is not perfect, but that countries can participate in a in better conditions, more equal conditions, let's say, and in a more transparent way in deciding these rules. And a global asset register, that means integrating the registers about different types of wealth, including, for instance, financial and non-financial wealth, in a single global registry. I mean, we are far from this idea, but Tax Justice Network proposes this as a way to envision what are the kinds of reforms that can change the system in a way that the public start speaking about it and demanding action for making this happen. And good taxes is a way to encapsulate the importance of having taxes that, tax the rich, that tax corporations more effectively, that enable also or that are helpful for contributing to reducing carbon emissions, to more than reducing carbon emissions, to achieve climate justice at a global level with a fair global Green Deal, and not only with this idea of reproducing the asymmetries of in terms of economic power across countries. So this is a set of proposals for fixing the system. And the one that can be the umbrella proposal is this idea of a UN tax convention. So, as I said before, in response to the OECD dominance on international tax issues, Africa in particular, that is the continent that is most affected by illicit financial flows, has for a long time tried to push for this agenda of having a UN tax framework convention, something similar to what we have for climate, the UN framework convention on climate change, the UNFCCC, but for taxes. And finally, last year, with a vote of, 125 countries in favor, and 48 against, that basically are reflected in this map. The blockers, the ones that voted against, are in red, and the supporters, well, the most active supporters are in dark green, and the lighter it becomes means lighter support as well. But I think that there is this map is very helpful to show the clear divide that we have at the moment, that is reproduced also for other topics. It's the same kind of block that, for instance, the blockers, the one that vote against the TRIPS waiver, I mean, for vaccines, for waiving intellectual property rules for allowing vaccines to be produced in global South countries. So we really see at stake here a divide that is at the core of the center periphery divide in the global economy. Luckily, like Africa, for instance, is united around this demand. Latin America, not quite yet, but some things are changing. And in Asia, you also have a pretty broad picture of supporters with some exceptions. But something that is really interested at the moment, that is an opportunity for change, is that you see that, the OECD countries are fragmented. There are some OECD countries that also supported a more active role by the UN, and that's really fracturing, like the blockers side. And is the thing that is like making these negotiations moving forward and undermining also the OECD position on the matter that needs to happen in tandem with a more active role by the UN. So the process is going to be this year for negotiating the terms of reference of a tax convention. This is happening in New York City. I mean, it's happening from here to August, and it's going to be a very important process that I think different social movements will benefit a lot from, like what can happen in terms of reforming tax rules internationally, because this connects, of course, with climate, with feminist agendas, with environmental justice agendas, with racial justice agendas, so on. Well, I have spoken a lot about the international side, but I want to focus a bit also of what happens at the domestic level in terms of the political opportunities for taxing the rich in a country like the US. And I think that for that, it would be very helpful to use this report by that I read, this book that I read recently, a very good book, I strongly recommend it, called A Taxing Journey, on how civic actors influence tax policy. And let me say just a couple of words to conclude on what do I see in terms of narratives, strategies, the role of coalitions, capacities, and political opportunities for advancing tax reforms. Well, this is an issue that is quite technical, and sometimes the role of narratives has to do with making it accessible for the broader public in a way that, you make taxes sexier because speaking about country by country reporting, unitary taxation with formulary apportionment, things, and all those horrible acronyms that tax justice activists sometimes use, of course, is not very compelling. But what is at stake here, if we look at what I said before on the 5 R's of taxation, is that this is directly connected to the ability of claim back like public services in public hands that are fully funded, that, for instance, are of that are delivered in the highest quality possible, that you have a system where those that have more wealth and income pay their fair share. And these are all ideas that, of course, like make a click when you are able to connect them with these perceptions of fairness and the perceptions of also, how people's pockets are impacted by unfair tax rules. And I think that it's very important in terms of narratives to make tax to test messages that are more relevant and salient to a wide variety of factors for advancing progressive tax reforms. On the role of strategies, I mean, this book is very helpful to show how successful civic action around tax reform requires engagement with a very wide set of actors and venues for reform, from executives to legislators and judiciaries, and media work is crucial as well. But that needs to be combined also with grassroots mobilization, so that a more versatile approach to strategies needs to be implemented. And what you see when you look at case studies is that actually like being able to have allies across different sectors that do different kind of work, like data analysis, for instance, media work, campaigning, mobilization when it's needed, uh, was key for success in terms of some of this civic action. And the role of coalitions then is very important because, yeah, for instance, in some cases that this book has a chapter, for instance, in some civic initiatives in Massachusetts, Maine, and Minnesota, where civic campaigns to tax the wealthy were implemented. You see that, for instance, like there was a very important role that the State Priority Partnership Organization, that is a network coordinated by the Center on Budget and Policy Priority, played in terms of providing some data and easy to digest technical insights for the coalitions in these states to be able to come up with messages for the broader public, but in a way that it was also hard for the technical experts to challenge the evidence that was presented. So also the role of unusual suspects on this, such as religious organizations, faith organizations, for instance, professional associations, and others can be very important depending on the context for mobilization. In terms of capacities, it's very important also to invest for civic organizations in capacities in the long term. And of course, there is a very important role for funders to play on this, but capacities that recognize that, sometimes you cannot have short-term gains, but also you need to be able to react to political opportunities in a way where you have the capacities installed already for making the most of some windows of opportunity that can pass very quickly. So as in other areas of reform, opportunities might arise or disappear at any time. And I think that in the US, for instance, what happened with the 2009 crisis and the austerity cuts really opened an opportunity for challenging this very negative view about taxation that neoliberalism was able to uh, um, consolidate in the US. And even when that opens some opportunities, we are facing now, again, a normalization of this neoliberal discourse again about how bad taxes are. But, like some changes in economic junctures or political junctures can happen anytime in a way that it's very important to make the most, for instance, of scandals, of some famous people that can position the debate among public media, but later to come up with the political strategy to approve some reform. So, for instance, in Massachusetts, the Fair Share Amendment took place, of course, like by a combination of sort of ideological and alignments, and the elections were favorable, but in states, for instance, as Minnesota, only when the Minnesota legislature flipped, and after several attempts, the four-tier income tax rate that made the income tax rate more progressive in the state was approved. So it took some years, but some events can really change the window of opportunities to advance reforms. And these political opportunities, as I said before, I think require that civic actors make long-term investments who are best able to act, to allow them to act opportunistically when the moment for reform arrives. Well, I will leave it there. I took more time than I should, but I hope we still have some time for conversation questions. Thank you so much.
Amazing. Thank you so much, Sergio. There was like so much there. It's like super useful and relevant. I just want to let folks know that, in terms of some of the things that were mentioned, like the OECD, there's a paper explaining how the OECD captured the entire global tax system in those readings that we shared. And I will also find one on the UN tax treaty because that's really interesting and share that with you guys. Um, but we're gonna move now to question and answer that Katie is gonna help with, and also I know some of you are involved in tax the rich in New York and probably have a lot of knowledge yourself about tactics for pushing through tax reform. So please, this is an opportunity to also share your knowledge. I'm sure Sergio would be really interested to hear that as well.
Thanks, Gaia, and thank you so much, Sergio. My name is Katie Key, and I do some work on tax justice with the Climate Community Project. So everyone, please think of questions that you might have, and I have one to kick off from the Q&A. Someone's asked, Sergio, as a short-term solution and measure that can be adopted immediately on the national level, it suggested the Tobin tax. What's your opinion on that? I think the Tobin tax is a tax on currency transactions, and it's a very small percentage, but Sergio, you can tell us more about that.
Thank you so much. Yes, a tax on financial transactions, more broadly. I mean, this was one key demand by the tax justice movement back in the early 2000s. And I think that it played a very important role, and there are still some campaigns about a Tobin tax. I will say first that, like, I think that the tax justice movement has evolved over the past years in terms of, yes, saying there are very interesting specific proposals that we need to consider as measures that can make the tax system less unfair. But the problem of governance and how decisions are taken were behind the ability of, like at the global level or at the domestic level, to be able to implement any of these measures. So that's why I think that there is a shift in the way the global tax justice movement is operating, and you can see also that a shift in some campaigns, tax justice campaigns at a national level, where you focus also on how do you really change the dynamics of decision making. Because otherwise it can happen that just like before, like you are removing the bread from the oven, something happens that ruins the whole thing. When you focus only on, we have these receipts, like only this kind of tax or this kind of tax, and you forget about the decision-making processes. So that's why I think this shift is an interesting one. But as part of that shift, of course, measures such as a Tobin tax is a good candidate for discussing once, for instance, some procedural matters are decided as part of a UN tax convention. The substantive discussions through protocols and so on should consider, a financial transaction tax. So the thing is, this plays out differently depending on the context. I indeed think that this can be, as the question suggests, a measure for like a short-term solution. But the problem is the political feasibility in different contexts. And that's why I think that even if the entry point for a tax justice campaign is the Tobin tax, that needs to be connected with like other points that relate more to decision-making processes, and how then you think both on the content of a specific proposal and the political feasibility to make it happen. So I will say that yes, of course, it's a very good candidate. It's also a if you think in this logic of the 5 R's of taxation, the repricing effect is an effect that can help to fight against speculative investments, to against capital flights and other things, that are more related to the financialization of the global economy and of domestic economies. And of course, a Tobin tax has those advantages as well. But yes, as I said, I think it's important to, if that's the entry point of a campaign, to think on the political feasibility in a specific context.
So much, Sergio. Do you have any questions from the room?
So what would be the next step, Sergio? Like, I know there's this convention, the UN in August. So what like activists can do, I think, in the meantime from now till then, I guess.
Excellent question. Yes. Well, from April to August, there are going to be two sessions. One between late April and early May, and one more in July, late July, early August at the UN General Assembly in New York City, where countries are going to negotiate the terms of reference of a UN tax convention. It's not yet the tax convention, the final text of the tax convention, but what are the elements that the tax convention should have, and what are some general principles that then are going to be binding for the negotiation that is expected to happen between like September and June, July next year, the negotiation of the actual text. So one very important thing to do, particularly in OECD countries, is to hold like those countries accountable, and the state parties accountable for the implications of their positions in terms of impacts in their own population and against other people in the global south, for instance. So as you can see, as I try to show with the slides, you can also estimate what is the impact that the OECD, the perpetuation of the OECD rules, is having in terms of depriving rich countries also of very much needed revenue that can fund public services for their own citizens. So raising awareness among people in global north countries about how this problem also impact on people, and particularly on marginalized communities, is very important for holding those states accountable. And also like showing the implications and raising awareness in terms of the global dimension of the problem. Now, I think in the US, despite the US is the hard, probably the most hardliner opposer of a UN tax convention, I think that you don't see a lot of debate about that in media, and this issue is very disconnected from the domestic conversation. So I think it's very important to try to raise the profile of the topic. Also, I don't know exactly what if there are mechanisms in the US, as like you have for writing your own representative about a domestic issue, if that can also be those mechanisms of writing to legislators and so on can be used for how they hold accountable the foreign state department or the treasury and the delegation that is participating in this process. But any action that can be done in that regard to put more pressure on how the US is behaving in this negotiation process, and particularly, like the delegation from the treasury and from the State Department. I think that's that's very helpful. Yeah.
Thanks, Sergio. I think we might have a question from Chris. Chris, if you want to unmute, I think we should all be able to hear you.
Okay, hi, I'm Chris. I'm out in Portland, Oregon. Thank you so much. This is such an informative presentation. I think it will set up other things, and it's. But anyway, the question. Actually, I guess maybe there are two questions. One is whether, when you were talking about source and essentially what seemed to be consumer taxes at the other end. In the US, we have a lot of, division between sort of income taxes and sales taxes, or, potentially value-added taxes in a lot of countries. And I'm wondering if there are types of sort of consumer end taxes, maybe luxury taxes or something like that, that can be, in general, sales taxes tend to be regressive, but, are there any that could be structured in a way that could be beneficial to low income countries in, one way or another? And I have another question maybe after that, but I'll wait to see if anybody else has anything they want to ask first.
Should I reply to this one first?
Yeah,
Sure.
yeah.
Yes. So yeah, that's a very like a very like good idea in terms of how to also combine different type of taxes, yeah, there is a discussion and a proposal, for instance, from Gabriel Zuckman, Piketty, and these economists that have a position also have contribute a lot to position the importance um, of taxation in the global agenda on ideas such as taxes on private jets, or these specific taxes on some goods that that are consumed by the rich. So even if it's an indirect tax, this means a tax that do not discriminate who is the or what's the income that the person that is going to pay the tax is, so that you can change the rate depending on like the level of wealth or income. Well, those type of taxes, like, or that type of taxes, focuses on a sector of the population that have a luxury consumption, and you are taxing then the rich, even if you are not using like personal income taxes or like wealth taxes. So yeah, that's definitely one way to do it. That needs to be combined, of course, with reforms also of the personal income tax, of the corporate income tax, with a push for wealth taxation. But definitely, I think that indirect taxes, such as consumption taxes, have a role to play with issues such as a tax on private jets. It's on private jets, even like taxes on on designed taxes on air tickets, but designed in a way that you charge the most those that are heavily heavily using like planes to travel, and then are are contributing a lot to carbon emissions. So there are considerations of design that you can take into account also for instance, taxes on on flights, so that on air tickets, so that you can focus also on the ones that on the consumers that are abusing the most, let's say, of the consumption of their consumption in terms of contributing to carbon emissions. It's interesting that, for instance, this is a conversation that is having more developments because one of the criticisms around carbon taxation is that, like carbon taxation can be an agenda that is if global south countries start to implement, well, they are going to charge like more taxes to their peoples that are not the most responsible for creating the climate crisis in the first place. So there is this objection from some voices in the global south of, oh, but why are we going to sacrifice ourselves and like put more to charge more taxes to our own people if like the most responsible countries are not doing their part? And in response to that, for instance, there is an initiative developed by an economist, a Brazilian economist. Her name is Tatiana Falcao, for a multilateral carbon taxation treaty. So you can tax carbon unilaterally. You can decide your own carbon tax. But if you want to incorporate in the discussion consideration of fairness on a global scale, well, the best approach is to have a multilateral approach to tax carbon and to do it through a set of principles that allows you to incorporate the principle from the climate justice field of common but differentiated responsibilities into the way you coordinate the states to design a carbon tax. And then this economist, Tatiana Falcao, has explored ways to try to make more operational this principle of common but differentiated responsibilities in the way countries can have a multilateral approach to carbon taxation. I can share a link here in the chat box about that. That can be helpful. Yeah.
Awesome. Thank you so much, Sergio. I'm now going to take sort of 2 or 3 questions and pose them to you. So do we have any more from the room?
What role does real estate in both urban and rural real estate investment have in the current tax scheme, and where tax avoidance is particularly common and where it presents particular challenges in developing schemes to enforce taxation there?
Yeah. Hi, Sergio. Nice to see you, and great presentation. I'm wondering about where some of the most exciting fights for more fair taxation are happening in different countries right now. I know you're in Colombia, so maybe talking a little bit about what's happening in Colombia, but if there's other countries that seem exciting, we talked about the UN proposal. It'd be cool to hear about other national fights.
Yeah, and so this is one from me, because I know that you wrote a really great paper looking at what the climate movement should be asking from tax, and I think tax is not really a very central demand of the mainstream climate movement anyway, but like what do you think are some top level things that the climate movement should be pushing, from a climate justice perspective on tax?
Good, thank you. Very, very, very good questions. Yeah. Well, on property taxes and the role of taxation of land, both in urban and rural areas. Yeah, I mean, I think that that's a critical area of work, and it's one that is sometimes doesn't get the attention that it should have. I think it depends also on the context, because, for instance, the composition of wealth in global north countries is like the share of property or of land property as percentage of total wealth has become less important vis-a-vis vis-a-vis the wealth sorry, the financial wealth. I mean, like, if you try to unpack like wealth for an average rich person in a global north country, you will see that the majority of that wealth, or most of that wealth, is financial wealth. And then like assets such as land has become a lower share of his or her total wealth. In global south countries, for instance, the non-financial wealth is still very important. And if you want to tax the rich in global south countries, of course, you need to look at financial wealth as well. But one essential component is land property taxes. Because, for instance, in countries like Colombia, I can speak about this from my own country, like land property has been used also to hide wealth from illegal activities. So drug trafficking, and this has very like interesting and sometimes unaddressed political implications, but drug traffickers in Colombia, for instance, blank their wealth buying land property in rural areas. And then they started to accumulate a lot of land and to have alliances with people, or have, like, as fake owners, some people that were there, but the real owners were the drug traffickers, And that's why in Colombia there is very, very interesting connection, like also between the paramilitary and landowners and cattle ranchers, for instance. Like, you see that many people from the many cattle ranchers, big landowners, were fake owners of land that basically those drug traffickers owned, really. And the way then to reduce the power of these people, like for instance, people that had alliances with the paramilitary and that accumulated a lot of economic and political power in a way that also captures some decision-making process to keep taxes to property very low, creating a sort of internal domestic tax haven, is to increase like proper land property taxes. That's a crucial reform in Colombia, not only for raising more revenue, but also for strengthening local finances, local public finances, for also pushing like those that are holding that land for, just having a couple of cows and that's it, because they do not have to pay more taxes, and they can keep uses of land that go against the features of that land. I mean, the productive capacities that the land has, is to tax them more. So with land property taxes in global south countries, you can contribute to different aims. Like in a country like Colombia, that means raising more revenue, strengthening public local finances, fighting against the beneficiaries of the armed conflict that had alliances with the paramilitary, changing the political economy of those municipalities where these people had a lot of power, and so on. But in global north countries, in any case, for instance, there is a lot of speculation around or speculative investments with land, and you have a lot of legal owners or legal entities that own urban or rural land that are hiding the beneficial owners of that wealth. So it's very important also to have more transparent land registries that hopefully also advance in incorporating what's the beneficial owner and not only the real owner, and in regulating better this sector and charging more land property taxes in a way that you can protect also lower income earners. You can also fight against those that are benefiting from speculative investments. So yeah, I think that's a discussion that is very important, and sometimes we don't speak as much as we should about that. Well, sorry, that was the first question. The second question was other countries. What is happening in other countries? Well, yeah, I mean, I think the Colombian study is very interesting because, a failed tax reform in Colombia was at the heart of the mass mobilizations in 2021 that led to a national strike that shifted the political landscape and eventually opened the door for the election of a progressive government in Colombia, which in turn approved a very progressive tax reform as its first political priority. So it's very interesting how the tax discussion in Colombia really changed the political dynamic in the country. And that was the first wave of a set of tax reforms that have been more progressive in Latin America. So Brazil is also discussing, Brazil already approved, Lula's government approved a tax reform, but that was for changing the regime of consumption taxes and indirect taxes in general, but it was a positive reform. And now they are discussing a reform for also increasing wealth taxation and making the tax system more progressive by reforming personal income taxes. So that's a very interesting reform that also can change the landscape of tax reforms in the region. The Chilean government also prioritized, Boric's government prioritized a tax reform at the beginning of his mandate, but they haven't been able to approve it. It has proved really difficult to move forward with this. But I think that what other countries beyond Latin America are doing in terms of digital service taxes, is very interesting because to tax platforms such as Uber, Netflix, and so on. One of the problems of the OECD agreement called the two-pillar agreement that countries negotiated a couple of years ago and that now is in a sort of implementation crisis, is that agreement asked or demanded from every country that implements the agreement that they give up on charging digital service taxes to platforms unilaterally. They were able to do it only through the rules decided as part of the OECD two-pillar agreement. The problem of that is that, for instance, some countries are already doing that, implementing the agreement when it is not clear if the agreement is going to be implemented at all because the US Congress doesn't want to approve the agreement. And I mean, I think that reluctance of the US Congress is creating this crisis of implementation at the OECD level that luckily is opening opportunities also for the UN Tax Convention to address this issue more consistently. But countries at the moment, what they can do, and this is what South Africa or India or Pakistan are trying to do, is to charge like digital service taxes with their own design outside the OECD rules. They are using their sovereign powers to do that. And I think that that's an interesting development that more countries should do as well. You know, like this taxation of the digital economy is an essential part of a fair taxation system. And I think that the call at this time for countries is like create your own digital service taxes. Don't wait for the OECD agreement to be implemented, and do it in a way that is more beneficiary for your country than what the OECD says. Well, and the final question was about, so the first was property taxes, other countries, and Gaia's question was about climate, yes, about climate. So, yeah, I mean, the obvious entry point to the climate discussion is carbon taxation, you know, is the most popular entry point if you want. But I really think that in this discussion, you know, in the climate negotiations, you see that there is a fight against an agenda from the global north that focuses on pricing carbon. You know, the main thing that we need to do is to price carbon, and through market mechanisms, we are going to solve the climate crisis. And then let's push global south countries to tax carbon in a way that they reach a floor that is similar to the one that some global north countries are implementing. That minimalistic agenda is against a broader agenda on climate that I think that we can call it a developmentalist climate agenda that poses that the main problem is the unequal, like the unequal or the asymmetric like power relationships in the global economy that is reproducing that whereas countries in the global north are turbo powering the green transition using their monetary policy, their fiscal policy for basically like expanding renewables, keeping the role of global south countries only as providers of raw materials. What global south countries need to demand is, well, we need a green transition in our own countries, but in a way that we can overcome the subordinate position that we have in the global economy. And that means green industrialization, but also like from the bottom, you know, being aware of how that play out, how a green transition can play out if it's not designed properly against local communities, and how a Green New Deal that countries implement in the global south needs to start by recognizing, okay, what local communities demand and how can they be incorporated in a fair manner, reducing also environmental and social impacts, and making fit their own views of development into a powerful project of development in these countries is the broader perspective that I think that Global South countries should push for in the climate negotiations. And what's the role of taxation then if they adopt this position? Well, the role of taxation is multiple because they need fairer global tax rules for being able to mobilize more revenue to fund their own green transition. They need to fight against financial secrecy and the way the fossil fuel industry and other polluting industry have used all these financial secrecy vehicles and so on to be able to do business without paying taxes. They also need to discuss, for instance, how to tax carbon in a fair manner through a multilateral approach. So the agenda becomes much broader than only, how do you implement carbon taxes in your own country and what's the floor that you are establishing. So I think that once you connect like the climate tax agenda with this broader developmentalist perspective, you need to discuss a lot of issues in addition to what are the mainstream discussions around climate and taxes nowadays.
Okay, thanks, Sergio. And I think we've hit the 2-hour mark, and I don't want to abuse your like very kind spending all this time with us. I know it's like 9 p.m. where you are, so thank you so much. That was really, really interesting. There's a lot there, and I know there's there's a lot of concepts and jargon, and we hope that we can add some reading materials to support you. But Sergio, you did a great job of leading us through that in a pretty painless manner. So thank you for your skill in that. And thanks everyone for being here and people online. And just to let you know that we are going to have 2 more sessions on this. This is running monthly. So the next one will be on looking at tax justice for reparations and drilling in a little bit more about the use of tax reform as a tool for reparations and some of the movements that are working towards that. That'll be on Saturday, March the 23rd. And it'll be at 10 to 12 p.m. Eastern time. And we'll have Chennai Mukumba, who's with the Tax Justice Network in Africa, based in Nairobi, and she'll be discussing that with us. And then the third and final session will be on the US and the global tax system. That'll be Saturday, April the 27th, and it'll be the same time as this one, 2 to 4, with Stephen Dean of Boston University Law School, and he'll actually be here in person to deliver this, so we can chat to him afterwards as well, so that will be nice. And that will examine the parallels and connections between the US and the global tax system, and look at the United States in the years after slavery and ended, and how reforms in the US legislation and policy could provide some solutions to dismantling the unjust global tax order. So thank you everybody, and we will follow up on email. We'll send the recording around, we'll send more readings around, and also happy to stay here and chat with anyone who wants to talk a bit more about the wonderful world of global tax reform. And Sergio, thank you so much again, and it's been really fun to get to know you as we organize this as well, so I hope we get to speak more in the future.
Thank you, Sergio.
Thank you so much for the questions and the conversation.
All right, goodbye everybody online.
Bye.